Good morning, everyone. I'm Michael Moon from Tax Assure again, here with Andrew Andreyev from ADLV Law. Andrew is a tax lawyer extraordinaire, and certainly we've worked together for many, many years, and one of the best tax lawyers I've come across over the years. And so we thought we'd have a little bit of a chat about what's going on at the ATO from both perspectives, and also a bit of a treat. Andrew's got a product that I've wanted to sort of share with you. Andrew and I were at a lunch the other day, and there was a lot of interest in this from the accounting and legal professions around this. It's a new product on the market, so we have a bit of a chat about that. Andrew, welcome.
Thank you. Yeah, good to be here.
Yeah, great. So, Andrew, just maybe just 30 seconds, a little bit about the law firm and what you do and what your background is.
Sure, yep. So I'm a tax lawyer and have been, it's our 25th year for the firm, and we sort of work in the mid-market businesses and high net worth individuals, helping them out with their structuring and tax. We've got a team of about 35 across Sydney and Adelaide.
Yeah, fantastic. And look, as I said, we've worked with you. People who sort of know us know that we absolutely help businesses and individuals that owe money to the ATO. But if there are disputes around the debt, and that can come in lots of different forms, and that's the sort of thing that we send off to the experts if the accountants that have sent us the client don't want to do that work and want some specialist advice. And we're working on a client together at the moment in that sort of space. So it's a great resource to have for us and to have you and your team on board.
Thanks. Yeah, I guess where the tax lawyer gets involved is when there's a technical issue, or it's not so much around the debt or managing the debt and the negotiation. It's really about is there a basis to attack the debt itself? So sort of the fundamental tax principles. Is there something that we can do to knock that out, or at least create some certainty around it, which then helps with the negotiation process that you guys get into.
Yeah, that's great, and that's what we've done on a number of occasions. And you guys have been very successful in many cases getting the debt down to very low, and then we just deal with the ensuing tax debt that falls out the bottom to help the client pay it off. I guess to sort of think about, we're seeing a lot, and I can talk underwater about what we're seeing with the ATO in terms of the debt side of things. But what are you seeing at your end of the sort of spectrum, Andrew?
Probably a similar landscape to what you're saying. Very hard-nosed, quite aggressive. One of the things we've seen is a focus on inter-entity dealings. So people, often have more than one entity in their group, and they might have a trust own a farming property or a factory, and then they'll have another entity carrying on the business. And the tax office is denying deductions within those groups if there's not sort of arm's length transaction, recharging going on within the group. So it's sort of like a transfer pricing type approach, but on a domestic basis. And so it's quite a technical issue, but it's something that we've seen in almost all of the audits and all of the reviews that we've got involved in, where the tax office picks up some easy money because very rarely do people with complex groups actually get all those inter-entity relationships and charging going on at arm's length. So that's one thing we're seeing. And then just also a lot of aggression from these state revenue authorities, stamp duty, land tax, payroll tax, probably at a level, I've been doing tax for about 30 years. I've never seen that aggressive, really, really aggressive. So I don't know what the story is with the state coffers of the of the state governments, but they
yes, and yeah, we're certainly hearing that a lot in the sense that we don't do a lot of work with the revenue officers, but we have we do bits and pieces over the years, and I used to always say to people that they were much easier to deal with in many ways.
Yeah.
But I think you're right. I think there's been a real shift around that, and so on. Yeah, look, and I think from our end too, it's the same message that we're seeing along is that the ATO are going very tough. They're applying the legal practice statements strictly now, which is catching I think a lot of people out who are used to dealing with the ATO in a particular way over the years, and put a story into the portal about, and again, we obviously look at it from the debt perspective, but put a story into the portal, explain what's happened, and more often than not, you'll get a payment plan and potentially a remission of the interest and penalties if your story stacks up. What we're finding now is and that's why we get traditionally we've had about 25% of our work from the accounting profession. It's probably closer to 40% now, because that is not the way it's working at the moment. They're requiring strict compliance. You need to tick all the relevant boxes. You miss a box, you miss something, one of the requirements that they have, and it's an automatic no. And then coupling that with, quite, I wouldn't use the word aggressive so much, but certainly a lot more timely recovery action. They're going harder and they're going faster against businesses and individuals, and that's it's a tough time to owe money to the ATO. But we are seeing that the ATO is very much looking at data, and I want to link it into something that we'll be talking about in a minute around that. And we've had some interesting ones now where, and these are in positions where we're putting in applications for, even just payment plans, let alone the removal of the interest and penalties. And, the ATO are coming back to us and saying, well, look, your client sent $150,000 overseas a month ago. What was that about? And was that money that maybe should have gone to the ATO? Or, we had a funny one recently where they said, well, it wasn't funny for the client, but we solved it. There's been a whole bunch of asset purchases, and they turned out to be high-end cars that they've been purchasing. And again, why are they buying those when really what should have happened is the debt should have been paid? And so we're having to sort of explain that. But it's showing they're going back and looking at income matching and saying, you said you couldn't pay the debt at this point, but your BASs show a different story. So it's really becoming far more complex, and certainly the questions we're getting back from the ATO in response to our applications are getting more complex. But again, it's part of what we do. The good thing about it is we're, unlike a lot of people, we would lodge more applications with the ATO than any single entity in the country, and we get to see them all and we know how to respond to them.
Data matching, I think that's sort of what you're alluding to. It's been an ongoing project. There's hundreds of millions, if not billions, I guess, that's gone into those projects, and I think the tax office and the revenue authorities are seeing, the return on that. And I think the next wave of sort of verification of identity is going to tie into that. So if you look at sort of almost every level, we talk about sort of China with their sort of surveillance society, but if you think about the level of everything we do is electronic now, and the ability for the government and all of the government authorities to access that information is, in real time, is becoming much more apparent.
Yeah, I mean, the obvious one at the moment is Payday Super, in the sense that, traditionally the ATO haven't had visibility of whether you've paid your super or not to the fund. And now not only does Payday Super bring those obligations forward, but, the ATO have been very public in saying that they will be getting data dumps from the funds to check that when you report that you've paid it, that you have actually paid it. So that's a seismic shift, I think, in terms of how the ATO will be monitoring a very significant part of the sort of the debt piece that we see, because, with us, it's broadly, pay-as-you-go withholding, GST and superannuation are the big three debts. A lot of our clients, unfortunately, don't have a lot of income tax debt because they're not making a lot of profits, but some do, but everything. But that super one's always been a bit of a grey area for the ATO to monitor, but I think those days are absolutely behind us, and it's watch this space. They'll have all that in place very, very quickly.
The crazy thing, and it's, I can't believe that we still have a discussion about, where the economy's going and what GDP is doing and what unemployment's doing. Because if you think about the data sets that the federal government now has, literally they know within weeks who's been paid what, pretty much across the entire system, whether it's transactions between businesses or it's transactions involving employees or contractors. Like, it is for 90+% of the population. It's real time information now. So it always staggers me when people talk about delays in actually understanding what's happening in the economy and why the RBA doesn't have all of that.
Andrew, as I've mentioned, you're a very accomplished tax lawyer, but you also have this software company, Syntac, I believe it's called, that's been in the market for 10+ years and has a lot of products in the market. Maybe tell us a little bit about that, and then how your latest sort of iteration of that is being used in the market.
Sure. Yeah. So Syntac was founded actually back in 2009, if you can believe it. So it's been a while. And basically, it's a company where I've predominantly been scratching my own itch, in the sense that as a professional running a firm, I come up with problems, and so we set up the software business to solve those problems. And we've got three main products. So the first one was called Falcon, which is a form and document automation system, and that's currently got about 60,000 end users. They're not all our direct customers, but we're integrated into some very large software products, and we've also been a supplier to the tier one supplier to the New Zealand government, sort of a whole of government contract. The second one's called SBOS, which is a practice management system for professional practices, mainly law firms, because the accounting sort of landscape is so crowded with practice management systems. But that's our second product. And then Structuregram, which is what we've been talking about on the structure diagram side of things. That's the most recent product that we've released. So I must say that this latest product, Structuregram, is the one that I'm most excited about. I really do think that it's relatively simple. So the Falcon platform and the SBOS platform, they're actually quite large systems, whereas Structuregram is very much targeted at this niche problem. How do professionals manage, efficiently produce structure diagrams? Pretty much since the beginning of my career as a tax lawyer, it was drilled into me that the first thing you had to do when a new client matter came in was draw a diagram, draw a structure of what you're dealing with. So, the boxes for the companies and the trusts and the lines between them and all that sort of stuff. So you actually understand, you've got a picture what's going on. And I guess over the last 25, 30 years, I've used Visio and Lucidchart and PowerPoint and Excel and all of the tools. But really, the sort of the holy grail is to have a system that is more structured than that. So when you create an entity, let's say it's a company that's trustee of a trust, that the diagram knows that box is a company, and it knows this other box is a trust, and it knows that the line between them is a trustee. So that it's actually a sort of a smart diagram, if you like, and you don't have to nudge the boxes around when you're drawing the diagrams, so they can all get laid out by an algorithm so they all look pretty. And then if something changes down the track, you can just drag another line, delete the other line, and it updates that relationship in real time. So
Yeah, and I think when I heard you speak about it the other day, it's not just a drawing platform. It actually pulls data from ASIC and all the back end system, and that's the real value in the fact that it's, you put a name in and it will build it based on publicly available information that you've now got agreements with to access.
That's right. Yeah, so we've got a full integration with XPM, which is one of the main. That's Xero, so that's what all the accountants use as their practice management systems. We've got the ability to upload hard copy ASIC extracts, either whether you get them from ASIC or you get them from Now Affinity or all of the providers. We've also got an integration in the system, so you can download ASIC reports and put it straight into a diagram. So you can literally search a company, push import, and it'll pop up the directors and shareholders and the company and all that sort of stuff. So, and that's something that we're going to continue to work on. PPSR integration we've got, so you can click on a company box and say, what charges, what security interests does this company have? So liquidators have showed a lot of interest. There's also the ability to go back in time. So if you've got a box that's got the directors on it, you've downloaded a historical ASIC extract, and you want to find out who was a director at this point in time, because they're the ones I want to chase from a insolvency perspective. You can just select the date and it'll show you a picture with just the directors and the shareholders at that particular date. And perhaps the final thing that people are using it for is to map scenarios. So let's say you've got a client who's got a super fund and they're the individual trustees. You'll have the little picture, you have the individual, and you have the super fund. And then you want to say to them, hey, I think we should have a corporate trustee for your super fund. And they say, well, what does that mean? You can go into scenario mode and take the base entities that the client's already got in their group and map out a scenario. So you can stick a new company in there, you can take them off as the trustee and show them what it looks like after you've run that scenario. So you can sort of go back in time, you can go forward in time, and then you can have a clear understanding of what does this person's group look like today. And there's not, the reason I've sort of worked on it, because there's just so many software applications out there. Like accountants just get bombarded every day. Lawyers are getting a new AI tool shoved in their face every second day. As far as I'm aware, there's no tool out there that integrates entity and relationship type data in a way that people can use it. So, there's tools that sort of half do those things, but they're all disparate. So the idea is this is not going to replace the practice management system. It's not going to replace your filing system. It's not going to replace any of those things. It's a specific tool for a specific problem. And the problem is, how do I quickly and graphically, for myself, understand what a client's situation looks like and give that clear explanation to a client in a picture. It's the whole concept of this, pictures 1,000 words, but they traditionally take a long time. I've spoken to, a lot of accountants and lawyers, and I sort of say, how long does it take you to update or prepare a structure diagram? And they say, it's a pain. I've got to redraw all the lines. I've got to nudge all the boxes around. It's about, an hour or so for a moderately complex structure diagram. And we can do that in minutes, basically. And if it's already, the data's already in there and you're just updating it, it's either done automatically, you just sync it with XPM or sync it with now Affinity or sync it with ASIC. So, you're talking hours down to minutes. And that's real. That's not just sort of market speak. That's actually what it does. Yeah, it's not just about the software, it's actually about the underlying philosophy of good advice being documented in accessible and visual. Yeah. So I probably could talk.
Okay, that's great. No. Look, it's great, mate. And I'm a bit the same with the ATO in the sense that, as I've said to you before, the ATO are going very tough, and there's reasons why they're going hard, because we had a $26 billion problem that's become a $60 billion problem, and there's a lot of pressure on the commissioner to get that debt in. But that's all well and good to understand that. But when you're on the other end of that, we had a building company that we actually helped previously in 24 and got them into a payment plan. They had a much larger debt and we got it cleared for them. And then they came back and they had a new, they unfortunately developed some new debt because there's a lot going on in that industry. And, and I think the current fuel crisis doesn't help. But, they've got about a $300,000 debt which they've accrued, which they put into a payment plan themselves. It wasn't one that we probably would have done, but it was adequate and they could cover it. But it was a bit short and a bit sort of tough on them cash flow wise. Well, it's sort of come home to roost now because they've got a BAS due of about 300 grand that ironically similar to the debt they've currently got, which they can't pay because they've been paying too much under their current plan to the ATO. And I understand why they did it. They wanted to clear it. So they've now come to us to see if we can help them to renegotiate the plan, get that BAS into a plan, a new plan to do that. And we've done that and we're now working on the interest from them. But it sort of, for me, demonstrates all good intentions to pay the debt off as quickly as possible. And we say to people, you should do that and, be as push it. But at the same time, make sure you don't put yourself into a situation where you're actually creating a bigger problem down the track with the ATO because you've given them too much. Either this company gave a large upfront, which wasn't part of our sort of engagement, but they also, as I said, the payments were too aggressive. And the ATO were very happy with it and they'll accept it. But sometimes it's better to have something that's more sustainable, and that's what we'll be doing for them now.
Yeah, no, it's so important to do that, to do the work up front to actually understand what, if you do model and understand what you can pay or the client can pay, then you've actually done the work to convince the tax office, because you're not just picking a number and going, hey, you're going to be happy with X a month. You're actually saying, like, here's we've done the analysis. The business is otherwise a good business and it's going to be sustainable and it's going to ultimately return more to the economy than it's taking out. But this is what is affordable, and that way you don't have to go back. And as we know, going back now is harder and harder because that you're getting further and further down that cliff where the tolerance is just drops off. So you want to get it right the first time. Totally agree. Yeah.
often something is put to them, and it'll be a case officer at the ATO who is a debt collector, and their job is to get the money paid as quickly as possible. And they will be saying to them, the system tells me because of your risk rating, and compliance is a massive issue with the ATO at the moment, and they're really pushing on compliance. And if you have any poor compliance record, they're saying we require a 30% upfront payment, and then the balance over 12 months. And so often that's put to them as almost a take it or leave it type situation. And so human nature is we'll take it and try and make it work. And then the problem is 3 months, 6 months down the track, they can't pay their BAS like the client that we've talked about. So, that's part of our job to go to the ATO and say, we know that's what the system is requiring. And if our client would do that, then we would absolutely do that. But they simply can't. And we're going to be having this conversation again in 3 months' time. So here's what is sustainable. And we put the case to them, we build it, and we address some of those issues that get raised from time to time about, when they use their data matching around what has happened with the client. And then we reach agreement. And it's much more sustainable. People have heard me say we're a weird business. We hate repeat customers. We don't want clients coming back to us saying they can't meet their obligation under a payment plan that we put in place for them. And it's very, very rare that happens. It's not never, but that's usually because there's been a change in circumstances. But so it's interesting times, but it's good to be able to help businesses. And yeah, so Andrew, look, thank you so much for coming, mate, today. I appreciate that. It was fascinating hearing about the new venture. And, I think one of the things is that I mentioned before, you're, one of sort of Australia's top tax lawyers, you and your firm and your team, and we love working with you. But you do have this bent around a software company that you also run and manage, and there's been a number of quite significant pieces of software that are used in the industry currently, which have come out of that, and this is the latest one of those. So looking forward to see how that goes for you.
Yeah, thanks very much. Appreciate the opportunity. Good talking to you.
Pleasure. Cheers.